Stock Market Investing 101. So this week I want to share a couple of videos, really basic investment videos. Now I talk a lot on this channel about macro, Austrian economics, and how I apply that to the world of investing using options and a whole heap of things. And I keep forgetting that not everybody has the experience that I do or that many others do. And so some of you who have been following this channel for some time have asked me to do some basic videos, some basic investment videos. In fact, some of you said that you don't even know how to buy shares. So this week, or in this video, I want to talk about what is the share market, or what is the stock market, and what is a share. So really back to basics. And then in another video, we'll talk about how to buy and sell stocks and what is a dividend, etc. So really going back to basics. So some of you might find it a bit boring, but for others be quite educational, because I want to help everybody get ahead. I want to help educate people so that and empower people to make your own investment decisions. So with that, let's get stuck into this video.
Welcome to What is a Share? A share is simply part ownership of a business. Shares are issued by companies to A. raise money for future development, or B. perhaps the existing owner wants to sell off part or all of the company by selling shares in the company to others. When you buy a share in a company, you become one of the owners of that company and share in that company's fortunes. However, if the company goes into liquidation, holders of ordinary shares have no rights over the assets of the company, so you could lose your money. How are shares created? There are two ways you can buy shares in a company. The first is through a float, which can also be called an initial public offering, or IPO. This is where shares in a company are offered to the public for the first time. Buying shares in a float is called buying on the primary market. The company submits details of its business and the share issue to the Australian Securities and Investment Commission, ASIC, in a document usually called a prospectus. Once lodged with ASIC, the offer is then available for potential investors to assess. If you want to buy shares in a float, you must first review the prospectus. The price investors pay for the shares will be determined by the company. The company will either state the price in the prospectus or set out the method for determining the issue price. Applying for shares in a float. You apply for shares by completing the form attached to the prospectus, nominating how many shares you want, and attaching a check or transferring money to a trust account for that amount of shares. You may be allocated all the shares you want, you might only receive a portion, or you may not receive any at all. If you don't receive all the shares you want, you will receive a refund for the remaining funds. How many shares will a company issue? Suppose a company considers its assets are worth $50 million. It might issue 50 million shares at an issue price of $1 each, or it might issue 10 million shares at $5 each, or it might issue 100 million shares at 50 cents each. In each of these examples, the capitalization or value of the company is the same, $50 million. People will apply for shares in the float if they think the company is a good investment at the issue price. Trading on the ASX commences after the shares have been issued and ASX approval has been granted. Buying and selling on the secondary market. Following the float, shares are usually bought and sold on the ASX using the services of a stockbroker. If you have successfully applied for shares in the float, you can then offer them for sale on the share market. If you missed out on the float or have taken an interest in the company after the float, then you can buy them on the share market. This is called the secondary market because the primary market was when the shares were first issued. Trading on the ASX happens second. Share ownership. The transfer of the title for shares and cash is called settlement. This occurs within 3 days following the trade date. As a share owner, your name will be entered on the company's share register and the seller's name will be removed. All shareholdings are registered electronically. The transfer of ownership is managed by the company's share registry. You can find out who is the registry for a particular company by using the ASX website. Welcome to What is the Share Market? Most people know what a market is. It's a place where people agree on a price when buying and selling something. It could be face-to-face in a sale yard at a cattle auction or online for a wide range of things using eBay. So it makes sense that a share market is a place where the buying and selling of shares and other securities takes place. Who is involved in the share market? A. People who want to buy and sell shares. B. Companies whose shares are bought and sold. And C. The brokers who do the buying and selling for you. Companies. If a company wants to have their shares bought and sold on the share market, they will have to be approved before their shares can be made available for trading. After they start trading, companies must continue to follow the rules of the ASX, including keeping the market informed. Generally speaking, this means that companies must make an announcement if there is something that's happened or is about to happen that is likely to affect their share price. By doing this, all the buyers and sellers of shares in that company have the same information. That way, no one is disadvantaged. The role of stockbrokers. If you want to buy or sell shares, you use a stockbroker. We call them market participants because they're the only people authorized to actually buy and sell on the share market. Whenever you buy or sell shares on the ASX, you will use a stockbroker, whether you place your order online, by telephone, or in a face-to-face meeting. Buying and selling. As with other auctions, there are two prices, a bid and an offer. If you want to buy shares in a company, your order is known as a bid. An order to sell shares is known as an offer. The ASX has a computerized trading system which calculates who has priority in the queue. It also matches bids and offers, which will create an actual trade. People who want to buy shares will instruct their broker how many shares they want to buy and the price they are prepared to pay. They may set a price or they may be prepared to pay whatever is the best price currently on the market. People who want to sell their shares will advise their broker how many shares they want to sell and at what price. They may have a specific price in mind, or they may say, "I will sell at whatever is the best price on the market." Once a trade occurs, the buyer and the seller will be recorded as having bought and sold. 3 days after the trade, ownership of the shares will transfer from seller to buyer.
So I did this video recently, investing lessons from Buffett, and in this video I share my philosophy and how I invest and how I break down my portfolio. And if you guys haven't watched it, I'll put a link in the description below. I definitely recommend it, and I definitely tried to simplify it in this video as well. And recently I did this video, Peter Lynch's top 9 investment lessons, which not a lot of people have watched, but I highly recommend it. Peter Lynch is one of the greatest all-time stock investors, and is definitely in my top 5 favorite investors of all time. And in this video, he really shares some really great investment lessons for all investors, from novices right through to experienced, accredited investors. So what I want to do is just cut to a short little 3-minute clip from this video.
In the stock market, the most important organ is the stomach. It's not the brain. There's always, on the way to work, the amount of bad news you can hear is almost infinite now. So the question is, can you take that? I mean, do you really have faith that 10 years, 20 years, 30 years from now, common stocks are a place to be? If you believe in that, you should have some money in equity funds. I mean, it's a question, what's your tolerance for pain? I mean, the stock market's a very good place to be, but I can toss a coin now. Is it going to be lower 2 years from now? Higher? I don't know. More people lost money waiting for corrections and anticipating corrections than the actual corrections. Well, you ought to look in the mirror every day and say, what am I going to do if the market goes down 10%? What am I going to do if it goes down 20? Am I going to sell? Am I going to get out? If that's your answer, you should be reducing it today. Well, I had this perfect record. I think the 13 years I ran Magellan, the market went down 9 times, 10% or more. I had a perfect record. I went down more than the market. Every time I went down more. So I just didn't worry about it. The point is, would you say to yourself, do I need this money in a year? Do I need this money in 2 years? Do I need this money in 3 years? So my longer term stock market's been the best place to be last 10 years, last 30 years, last 130 years. But if you need the money in 1 or 2 years, you shouldn't be buying stocks. You should be in a money market fund. Well, I think emerging markets, and that's not my expertise, but I mean, these markets have been really hammered. You know, and a lot of countries are doing a lot better. You know, I mean, so I think there's potential there. That's not my expertise, but I think emerging markets could be a place to research. I never looked at the economy. I want to find out, the only thing I would look at what's happening right now. You know, what's going to happen a year from now? What's going to happen to interest rates? I'd love to get next year's Wall Street Journal. I'd pay an extra $1 for it. That'd be very helpful. I don't know what's going to happen in the future, but I want to find right now. Well, I think anybody that's investing in the stock market has to understand, you buy a company. These are not lottery tickets. These behind every stock, there's a company. If the company does well, over time, the stocks do well, and vice versa. You have to look at the company. That's what you're researching. That's what we do at Felly. That's what I do. You could be an interventional cardiologist, and you're putting in Abiomeds in Pella. You say, wow, this really is an incredible breakthrough, preventing shock, preventing hemodynamic support. It's amazing. It's a breakthrough. It's great. It works. But you're actually using it. I mean, or you're assisting. You're in the operating room seeing this breakthrough. That's, you saw way ahead of most people. That's an edge. You need an edge on something. Well, the data now is so good. I remember when we owned Nike, we had to wait for the mail to come to our library. Now, when somebody reports earnings, it's telecast all over the world. They have an investor presentation, they show a balance sheet. So information is much better. So theoretically, the individual's edge has improved in the last 20, 30 years versus the professional. The data is there. It's free. But I think a lot of people, their problem is they have so many prejudices, they have so many biases. They won't look at a railroad. They won't look at an oil company. They won't look at a steel company. They're only going to look at companies growing 40% a year. They won't look at turnaround. So one thing, you just don't have so many prejudices and biases. I bought companies with unions. You have to really be agnostic.
So I'll put a link to this video at the end of this video, so you can just click directly on that and it will go straight through to this video, or I'll put a link in the description below. Now, I want to give you an update on Finance Uncut Insiders. We're very close. I said in a recent video that we needed to get to 200. That was the target that I said to make it, to justify me taking time out of other roles in our businesses to be able to provide this for you. And we are close. So we're at about 180. However, there's several of you who have emailed me twice. So it's probably more like 170. So we are close. Now, for those of you who don't know, Finance Uncut Insiders is a weekly report where I share our investment portfolio, our trades, all of our research and analysis, why we're buying certain assets, why we're selling certain assets. And for that, it does cost $1 a day for a 12-month subscription. That's $365. But for our launch, we are giving a 30% discount. So it'd be $255.50 US. That's US dollars. So for my Australian investors, it's going to be a little bit pricier than that because our dollar has fallen. So $255.50 for an annual subscription from this launch. Now, I have put together the report. I'm going to have to cut it back because I, especially for our exploration stocks, I've been putting a lot of the drilling results and what that all means and et cetera, et cetera. And the report is quite long, so I need to cut it back. If you guys want to have a sneak peek of this, what I recommend is when you click onto this video and watch it, Peter Lynch's Top 9 Investment Lessons, skip ahead to I think it's a 15 minute and 51 second mark, there or thereabouts. And you can get a sneak peek of our Finance Uncut Insiders report and what it looks like. We do give a couple of stocks that we currently own, one that we're still buying, one that we hold. And what I do need to do is cut down the research and analysis so it's similar to what's on there, because I've really gone in and put so much information into this report that I think it's an overload. So I need to cut it back, just get to the key points of each stock, why we're buying, why we're owning, and why we're selling particular stocks. And yes, we do have a lot of US stocks that we own, that we're buying, and also that are on our watch list, which you guys will get as well. So once again, if you're interested in this, send me an email to the email address below on the screen. And yes, I won't forget to put the email address on this one. It's right there. See it? I can see it. No, I've got to edit it and put it in later. Anyway, guys, yeah, as I said, if you want to check out Finance Uncut Insiders, see what it looks like, click on the link to this video, either in the description below or at the end of this video. Go to the 15 minute and 51 second mark, and then you can watch it there. So we're very close. We're very close. Anyway, guys, if you like this video, if you found it educational, our next one coming out is about how to buy and sell shares. We've got another one, what is a dividend? So stay tuned for that. If you like this video, guys, we really do appreciate it if you hit that like button. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.